Hey everybody, welcome to Mortgage Today for Tuesday, August 15th, 2023, and oh, what a day it was. MBS were up 5 basis points in the morning. Not much, but at least it was green. Stocks were in the red, down 31 points. Bonds were already modestly weaker in the overnight session, but started losing ground after a much higher than expected retail sales data. Retail sales came in at 0.7 on a 0.4 forecast. Wow, that's a big beat. On a 0.3 previously, it's up 3.2% year over year. Food and drinking was up 11.9%. However, that trend in the bond market is beginning to reverse a bit quickly thereafter. There's no big obvious development accounting for the reversal in the bond market. It could be profit taking among short positions, or it could be the 4.25 technical target prompting value buying in Treasuries. Notably, the former would mean the good vibes were merely temporary, which kind of played out that way. A lot of data out of China. China reported weak economic data overnight and cut interest rates. It also suspended reporting of youth unemployment data, which hit a record high of 21.3%. To put that number into perspective, the youth unemployment rate in the U.S. was 7.9% in 2022. The increase in U.S. Treasury rates is somewhat perplexing in the face of this, as weakness in China will send deflationary pulse through the world. As commodity consumption falls and credit issues cause a flight to safety. Property issues in China will almost certainly have an impact on global interest rates as well. China's largest private property developer has missed payments on some of its bond issues, and sentiment is dour for the entire sector. China enters a depression or severe recession that will pull global bond yields, and we should see all sorts of deflationary impulses, including a drop in commodity demand, a depreciating yuan, and flight to safety. The real estate sector in China reached 30% of GDP, which is an eye-popping number, which is way higher than the US during the bubble. We also got homebuilder sentiment, which fell in August due to rising mortgage rates. Declining customer traffic is a reminder of the larger challenge that shelter inflation is up 7.7% from a year ago and accounted for a striking 90% of the July consumer price index reading of 3.2%. We also got news that Americans are pulling money out of their 401k plans at an alarming rate. The number of people who made a hardship withdrawal during the second quarter surged from the first 3 months of the year to 15,950, an increase of 36% in the second quarter. The biggest news of the week will likely be the release of the Fed minutes tomorrow afternoon. Everyone will be reading the hell out of those tea leaves. There seems to be a wider range of opinions in what to do amongst the Fed members. Fed might be waiting to see a weaker jobs report before actually pausing. Yesterday, we examined last week's paradoxical bond sell-off in response to inflation data that should have helped. Today's paradoxical shoe is on the other foot. Retail sales crushed the consensus, and although bonds sold off initially, they rallied back to stronger levels in short order. Granted, that recovery didn't last, but by the time bonds hit weaker territory, the retail sales trade had long since passed. Initial resilience may speak to some value buying demand from traders who think 10-year treasuries yielding over 4.25% are worth owning, which is a good point. MBS lost 12 basis points on the day. Stocks dipped 51.86 points, ending the day on the 5.5 at 97.91. This is underneath this Fibonacci retracement line at 97.984, and this is an ugly range. We really need to get some sort of correction up higher. Otherwise, we're going to start looking at some higher coupons, which is not a good thing. Meanwhile, in agency news from the courtroom, Fannie and Freddie shareholders were awarded $612 million as it was found that the regulator for Fannie Mae and Freddie Mac improperly amended stock purchase agreements in 2012 when it allowed the U.S. Treasury to sweep the company's net profits. So the jury in Washington, D.C. awarded the shareholders at $612 million. Also, we got 2 posts today from our sponsor at thatmakesense.com. So it's talking about the hard landing and what a no landing means. So we always been hearing for a while that a hard landing would be a recession as a result of the Fed actions, but what does a no landing mean? So check it out on thatmakesense.com. And then also, you are either adding or subtracting from your influence. There is no middle ground. So it's all about how to be more influential to the people in your life, whether it's customers, coworkers, bosses, kids, cops you don't want to write you a ticket. It's all about influence. So check it out at our sponsor at thatmakesense.com.